Hi everyone, this is Kathy and Thomas on What's Up. We're almost the end of the second quarter of 2026, so we're so behind on doing these podcasts, and I don't know why, because we love it.
We do.
I guess it's just scheduling the time. We try and get something out to you about every 6 weeks, so we're very timely and we're very pertinent. So we're going to have to do some housekeeping and go back a little bit. So we've got a number of things on our mind. I'd like to start with taxation. So everyone filed their tax returns on time, yes. For those of you that couldn't find your tax slips, we're here for you. We got them to your accountant or to you, and you would have gotten the results. So I would like to suggest we have a fabulous accountant on staff, Pam DeLima. And if you think things weren't quite right on your tax return or you have some questions, just shoot us out an email and we'll take a good look. We found some pretty big errors in previous years.
Yeah.
But keep in mind, this tax time of year, accountants are working double time. The last 4 weeks, 6 weeks, I think they live at their offices, they're living on coffee. So it's very easy to make a mistake in that kind of situation. So we love reviewing this stuff. It's value added to you. It's not what you make from your investments, although it is what, that's a big part of it. It's what you get to keep from the tax guy. And are you in the right vehicle? Yeah, so there's lots more to it, but we are performance driven also, of course. So I've got the tax on my mind. I just want to make mention, we did have a little luncheon and it was on flow-throughs. For those of you that are in that high tax bracket, just got a big bonus or some stocks. We did have a number that we put in flow-throughs last fall, and it seems that CRA is auditing all those. It's a little outside our norm, and I know for sure that my tax refund, although it's small, is usually it comes quickly, and I haven't seen it nor communication from CRA. So hang tough on those. Holler if you need us on those. It's taking a little bit of time. So that's pretty well it with tax. I guess we should move right into what's happening in the markets. And this is exceptional performance, and the last 3 years have been exceptional. And I know the world's in turmoil, so it comes as a bit of a surprise when I'm reviewing your portfolios and we look at the rate of return year to date. Thomas, holy cow, there's war here, war there, strife, trouble. Our continued conversation, if we can call it that, with our neighbors to the south. Tell me where we're at. Tell me where you see the best opportunity or where we've performed the best.
Yeah.
Tell us all about this. I'm happy, I'm grateful. When's the party gonna end? Let's start with where we are now.
But look into the crystal ball.
Yeah.
I feel like every time we do this, we always talk about how there's no shortage of news, but I feel like that's more of the same that we're seeing now. We're seeing trade negotiations, or do we have a peace deal? Is that off the table? What's going on now? We have midterms coming up, and it's been we're almost at the halfway point of the year, and we've had strong market performance, as Kathy's mentioned. We're up about 7.5% as of today in the U.S. and 9.5% in Canada. States largely still driven by technology. A lot of the Make 7, Nvidia, Apple, Amazon, Google driving a lot of those returns. In Canada, strong bank performance. It's the big six that have been carrying the market here. A lot of the trailing 1 year returns on the banks up 40-50%. And we're seeing some good returns in oil and gas too, as we've had some longer episodes of conflict around the world. So we've seen a lot of price volatility. One thing that we're watching on too is now with increased commodity prices is inflation starting to take back up slowly but surely.
What are we at? 2.8 last time I looked?
For us in the US had a little bit higher in a spike. So, and now this last meeting was Trump's new appointee as the Fed chair. A lot of pressure potentially there just on him and keeping rates low heading into midterms. That's a big factor as Americans go to the polls here in the fall. with midterm. Trump obviously wants to keep inflation low, keep costs low, keep the market up high. But on the flip side too, when you have oil for a sustained period over $100 a barrel, you're going to see that trickle down to the consumer. You're going to see inflation tick back up. So it'll be interesting to see these next couple months and to see the data roll in on inflation and what the correlating response will be from the Fed now that Trump has his quote unquote guy in there. So that's where we're at. Strong first half of the year. We're seeing very strong earnings. Earnings has been continuing to be a significant component of the price return, which is strong. There's two ways that you're gonna make money in the stock market. You can get that based off of multiple expansion. People are willing to pay more for every dollar of earnings for a stock, or you can see earnings start to grow and the company will grow proportionally to earnings growing. And right now we've seen, while multiples, things are getting a little more richly priced, we've also seen some significant earnings growth in the States and also in Canada too. And that's been a big factor of the bank earnings. And people continue to want to pile into the stock market. And right now the earnings and capital is being properly allocated. So it's been another significantly strong year. And this is going on year after 3 strong years, double-digit years in the markets. It's been quite impressive.
Yes, and that's geometric. The compounding is geometric. So when we're reviewing portfolios, working with you on servicing appointments, what we're seeing is 3 years ago we had, after Russia invading the Ukraine, which is still ongoing, we're seeing phenomenal performance. So when you get compounding on compounding, it's geometric. So it's been quite an uplift to most portfolios. We're way past what our expectations were when we ran your financial plan. But I think we can't finish off the market without bringing up that crazy SpaceX.
Yes.
Wow, that initial public offering from Elon, that he limited it to 4% of his company.
Yep.
So he made it exclusive. This guy is so clever. But tell us, like, wow, out of the gate, it was like SpaceX. Where would we be now?
I do want to make mention this is very much at the time of recording because this could change very much day to day.
When we get out the door.
Exactly. Shares were offered $135 a share. We saw them climb after a couple of days of trading almost up to $220. And now, as of today recording, we retreated back to $157. Big moves both up and down. It was the loftiest and most expensive IPO in history. I think right now, as of today, where they sit, it's about the 7th or 8th most valuable company in the world, right out of the gates. Historically, we've seen companies like Facebook and Apple and Amazon, they tend to come to the public markets about 4 to 5 years after establishing themselves as a business. SpaceX, on the other hand, has been private for over 20 years. So we're starting to see these companies have to keep private longer, let that window run up longer, and to really maximize their access when they come to the public market. So even though, and of that, only 4% is publicly traded between you and I, the other 96% is still held internally. It was an interesting stat that the day that SpaceX went public, 4,400 new millionaires were created in the US from all the engineers over the years, people that have worked at SpaceX. So quite a story that's been dominating the news there. And the market is just trying to figure out where to value this company at.
And isn't Elon our first
trillionaire?
I
also have to update that too as of today, because when the stock moves up and down 5%, a 10% sway for his net worth that's a $100 billion move in net worth. So he's extremely rich, but it really depends day to day with that guy.
What is zeros?
Yeah.
Reminds me, this will date me, reminds me of the old days of Nortel, where even the cleaning lady was a millionaire because she had stocks. Incredible, not that it's a similar story, but over concentration, irrational exuberance, all those words, be careful. And when it shot up on day 2, I said, oh, run for cover, run for cover. This cannot continue. So we have had great performance this year. If you're in a position where you're retired and you're in systematic withdrawal, what we're doing is taking money from that upper part of your water cooler and putting it in your withdrawal pots, just ensuring that we have the next 1 to 3 years hammered down, because this is long, great growth. We've had some ups and downs, but really the performance has been exceptional. So it's always prudent, I hate that word, prudent to take some money off the table and shelter it and just ensure that all your needs will be met for the next long haul. Just takes the stress out of any portfolio. On the other hand, if you're Thomas's age and the market's this high, whoa, maybe approach it with caution. So say, Thomas, I'm your age, I can only wish, and I've got 50 grand and I say, here you go, Thomas. What are you thinking you're gonna do with it? And I'm going, go for SpaceX.
We'd probably say for right now too, let's hold off a little bit on that. We always have a continuous pipeline of money coming in, money coming out. For new money coming in, right now we've been working on down days, dollar cost averaging in the market. It's really tough to predict where we might be over the next couple weeks or months. What we do know is that if we're working with a long time horizon, that on those down days, we want to start working in that money, slowly but surely, finding out, coming together with our wait list or our wish list, that some people might say, of areas, sectors, stocks that we want to invest in. And when we see down days, as the market's trying to figure out its direction at this point, we're going to be adding to that. Less concerned, of course, to figuring out when do we need this cash. Am I looking to buy a house in the next couple of years? All right, we probably want to have that off to the side in a cooler investment, maybe earning us some dividends. For anything longer term, on those down days, those are great entry points that we're going to look back in 10, 20 years from now, even though we might think we are a little richly evaluated right now. I'm guessing we'll be quite happy with any entry points that we have today when we look 5, 10, 20 years down the road. So we're going to be patient, but we're also going to be ready to execute when we do see those pullbacks. Because the market, the US market, Canadian market, it still is the market of choice where people continue to want to put money into for their future to invest. So we're going to be ready, and we're going to have our wish list in place, and we're going to be ready to execute when those opportunities come up.
Okay. I must say, my pick, just gotta say that, of about 2 years ago, 2 and a bit years ago, going into that sector of nuclear energy has really been great. Because the performance has been so strong, the risk rating has been raised too high. So when you have a higher standard deviation, which is really great performance or really terrible performance, you can get a re-rating on the risk profile of that. But nuclear, we're always aware of the percentage in your portfolio, and that was a good play.
It really was, and that was a great AI play. I think a lot of people think when they think AI, you have to be in the chip names, the NVIDIAs of the world, people, the open AIs of the world. But for us to, and seeing where we're more comfortable with getting on our AI exposure was the consumption, the energy consumption. It's going to be a huge component of the industry going forward, is who's going to be controlling the power. And we already see a lot of these big names buying and trying to create their own nuclear energy companies underneath the hood of their technology companies. So it's a big component of the AI trade is looking under the hood, and I will give Kathy your credit on that one. She did a great job on the nuclear energy. And now it's something you see in the headlines quite often now. But looking back 3 or 5 years ago, didn't see a whole lot about nuclear energy in the news, but it's something that's always seems to be right up there. You see quite a bit. So
where you see a new AI center, you might see a portable nuclear reactor. They're small, easier to build, safer to build, and you can move them up north wherever you see fit. So we've been loving the banks. If when in doubt, I say let's just buy banks, because they are a monopoly, extremely profitable. So in closing, we could go on forever, but in closing, because the market's so high and because you have such large capital gains in your non-registered positions, I'd like to call you to action a little bit early on your charitable. You know, we started about 10 years ago with one position, and last year we announced that we had sent out just shy of 900,000 to charities in Canada, and that really makes our hearts grow bigger. And take a look or give us a buzz. We'll look at your positions. We'll identify the largest capital gain, just give us your list of charities and we will send that stock, ETF, mutual fund, whatever it is, that position out in kind to your favorite charity, paperwork, administration. So let's start it early, and you will get the full charitable deduction and none of the capital gain. At the highest tax bracket in Alberta, this gets you 53% back. And with our world in turmoil, you can make a difference. You can make a difference locally. You can really move that dial on gratitude, everything good in life. We have so much. So this year, I'd like to give out more than $1 million. I think we can do it together. Thank you so much for your time. We'll see you in about 6 weeks with the latest update.
Yeah.
That was fun.
That was. We'll see you next time.
Thank you.